What is going on, everyone? Sorry about that. Welcome to Hidden Edge Podcast, episode 32. Thanks for joining us. My name is Sam. You guys probably know me on Fitzway, and this is my friend Kris as well. What's going on, Kris? How are you?
Good, man. I'm about to start the live stream on X also, so
Do it. Let's invite
I'm just
some of
trying to
those
think of
people over here.
launching cell phone towers. Okay, cell phone towers in space. ASTS. Okay, we spoke about this one briefly a while back, but I think covering it more right now will actually be a good idea. And then I might actually end up talking about natural gas, because you know what? When you're with Kris, you can't not talk about natural gas.
I mean, it's pretty interesting, like the way the market's been moving. Like for the most part, you have growth stocks and you have tech kind of moving and correlated with each other most of the time. And then you have other sectors that people don't really talk about too much in FinTwit because it's just not that exciting, I guess. But XLE or energy has been outperforming tech year to date. If people aren't aware of that. In fact, there's a lot of sectors that have been outperforming tech year to date. So if you've been diversified into different places, you probably are doing pretty well this year. But if you're like tech heavy, like myself, then you're definitely not performing as well as a lot of those other companies. So let's get it going. I mean,
let's do a quick breakdown. Hold on one second. Let's just show this real quick. So right now, these are the sectors that have been. Can you share my screen real quick? There we go. So sector performance wise, the last 3 months, energy has been dominating. This has basically been the Trump administration's one of their biggest pushes, which is energy dominance. So energy has been taking somewhat of a lead. So I think some of our positions in the plays that we have on natural gas have actually worked out well for us, especially next decade. I wish I could say the same about Venture Global. I wish that was moving a little bit more, but I think they have some catalysts on the horizon which give me a lot of upside, but like a lot of upside potential from where I think we are right now. So, but overall, I think energy's been doing well, and lately there's been some level of leveling off in your consumer cyclicals as well. So,
for sure, man. I mean, I definitely think also the fact that ex-US has been outperforming the US for the most part. One thing that I've been looking at closely, I could actually share my screen over here. And this is really kind of the all-telling sign as to whether we're going to continue rallying or not. As for me, though, I don't know if this might be the case, but I think it puts me a little bit of a edge position to keep an eye on this. But I'll look at that. Futures are up right now. So anyways, if I go over here, I always keep track of the global markets and a bunch of other markets besides tech stocks. But if we look over here at HSI, which is basically the Hang Seng, Hong Kong Hang Seng ETF or index, this is basically what a lot of people are tracking China with, right? So this is very tech heavy. It's like basically the S&P 500 of China. And if you look over here, since basically the beginning of the year, right, it's just basically it's up and to the right. Actually, let me do something over here. I'll do performance, right? And then I will switch this over to lines. Okay, so if I do HSI, actually, you know what? Let me do FXI.
Yeah.
Right. So that's basically the ETF version of the Hang Seng. So this is just up and to the right, right? So let me switch this over to percentage. About 22% year to date. It was up about 29%. Then we had quite a pullback recently. But let me actually attach this little bit of a correlation over here, right?
To the SPY.
S&P 500, right? So still down. This is just year to date, down about 1.5% year to date. Just year to date, okay? Not from the all-time high. All-time high would be over here, so we're down about 6% from the all-time high. If you look at this, S&P 500 is about sideways and then drops like a rock and then bounces. When does it bounce back? It bounces back right around the time money starts exiting China. So if China, in my theory is that considering that that liquidity is still tight out there, like we're not printing trillions of dollars and handing out stimulus checks, and the Fed is still technically letting bonds roll off its balance sheet and still selling mortgage-backed securities into the open market. So that's $5 billion letting roll off balance sheet, and it's $25 billion of mortgage-backed securities being sold into the open market. Technically speaking, it is a tight liquidity environment. No new money printing. So the money has to come from somewhere, right? If China is going up, it has to leave somewhere. It has to leave the US because most of foreign investors.
Don't forget Europe. Don't put Europe up there as well.
Yeah, I mean, I'll put the DAX up here. DAX is the German stock market. Okay, that thing is just up and to the right. Also, there's another country that's basically been going up as well, and that's Poland. So EPOL is not technically the representative of it, but EPOL is literally outperforming all of these other countries. It's crazy. Even Sam Mercier has been in Poland. Like he's been deep diving into Polish stocks all of last year. Basically, the second end of last year, he was buying heavy when Poland was all the way down here. And kudos to Sam, but he is quietly profiting off of this whole scenario. And a lot of money managers are, right? Poland is still going up, but we saw a little bit of weakness in China, a little bit of weakness in other European stocks. We saw the US bounce back. I am keeping an eye on this. This is really important because if China bounced back to all-time highs, I think we will have a very hard time making it back to all-time highs, in my opinion. The money has to come from somewhere. In the stock market, unless we're printing trillions of dollars, the money has to come from somewhere. It is just money moving around, right?
I think there's
and a sell. Yeah, go ahead.
There's a simple equation here. Who's printing money and who's not printing money? And we're contracting, they're spending, right? So of course their markets go up. Their markets go up, our markets go down. That's just, it's a pretty simple thing. And then when you think about the valuation, their valuation is low, our valuations are high. So, it just kind of makes sense to figure out like, okay, where's the money moving to? So
this is M2 money supply for China. This is how much money they're just continuing to print.
Actually, a lot of liquidity. A lot of liquidity
for China. I'm not sure if this is exactly right, actually, now that I think about it, because I want to make sure I'm looking at the right stuff. So M2,
it's the velocity of money in China. So I think that's about right. China money supply.
I mean, there's M2 for China, but I feel like that's not right because if I do remember,
there it is, right there, right. Try that. I mean, it's probably in CNY. That's why. If you want to put it in dollar terms, look at the top right and change it to dollar. There you go. Just put it into dollars. So there you go.
There we go. Yeah, this is a better representation.
Yeah.
So, I mean, what country was not taking money from the system or tightening monetary policy? But China, we've been on this, like they basically have injected so much money to the system and continue to inject money to the system. So that it's like basically the equivalent of COVID for China, right?
Yeah.
Except in this case, it's purely driven because the Chinese economy is like literally falling off a cliff or has been for some time, and they need to stimulate the consumer. They're focusing on consumer now. And by doing,
and they can afford to stimulate too. So it's not just a matter of, hey, can see if you look at their inflation rate, the Chinese inflation rate is actually down. It's negative. So when you think about it, countries, when inflation rates are down, they can afford to spend more and print more money. So let's just look at China inflation. And a lot of the reason why their inflation rate is down is because of weakness in their consumers from the implosion of property. So look at that. Literally, they're almost negative. From what I saw last quarter, they were actually down, year over year in inflation. So the Chinese have a lot of room where they can print money, and bring a lot of that cash to their consumers and basically shift from a more export-driven market to a consumer, internal consumption market, which means a lot of the companies that are in China, they're going to do well. They're going to have a lot of growth ahead of them. So I think China is not a bad place to be, especially for the next few years, as long as the government stays in stimulus mode. So
this data is not correct, or at least it doesn't go that far. So probably going to have a little bit of issues showing that here. But for the most part, you overlay that with the US. All right, forget about this. I'm not going to show this anymore. I think everyone gets the idea. But anyways. If China goes down,
this is usually better if you want to do this. So if you look at this is China's inflation rate. Yeah, this is China's inflation rate, right? And you can see here that they're in literally negative territory right now. They were up to about 2 points, but they can manage this. So literally for the last 10 years, they have had decent inflation, into the 2020s, but then literally it's fallen off a cliff. And because of that, if you compare that against like the US inflation rate, you can see here that we've been moderating our inflation, but we've been much higher than they have, you know? So look at that.
Yeah,
So
they're
of course,
basically in deflation. That's if we were in that scenario, we would not be at 4.5%, and we would not be tightening we would not be doing quantitative tightening. We would be printing fast. And I mean that's the story that we have right now. That's what we're predicting. We're predicting that we're going to get into a disinflationary environment where the Fed is going to have no choice but to start cutting rates at an exuberant rate. But we'll see what happens with that, right? I think right now there's only two rate cuts being priced in for this year. I think that's way too low. I think we're getting at least 4. And I don't think that we've seen the brute force or the brunt force of I wouldn't say inflation collapsing, but continuing its trend down as opposed to stickiness. So when Powell said that inflation is transitory, I think he's right. I think inflation is transitory. And there was that joke, right? Like it's like, oh, he's saying he's using that T word again. It's like, no, I think Powell is right. I think inflation right now being up here again is transitory. And I think that's going to surprise to the downside. And if that happens, I don't know how the market's going to react to that, but I definitely do think that it's going to set the Fed up to continue cutting rates. They're going to do what they do best, which is absolutely nothing and be data dependent. So
I think this is the chart that we should just be following. Basically, this right here is just U.S. rent inflation. Rent inflation literally went to 8% in 2023, and it's been on a steady decline. Right, this trend is not breaking, and it's not going to break anytime soon. More and more homes are becoming more available in the market right now, so inventory is swelling. So if you look at vacancy rates on rentals, they've got back to pre-COVID levels already. So the only reason why rent inflation is even here what it is, unlike other parts of the indicators are a lot more liquid, shelter is not liquid. So, you know, you have rent leases that have to roll off and renewed and everything else. So this steady decline will eventually lead to the PCE coming down as well. So you can already see PCE was down to 2.1% in September, which is when the Fed did that massive 50 basis point cut, right? Eventually, we're going to get to the point where this is actually going to be outstripping, and we could actually end up seeing this go down to maybe like barely 2%. If it gets to 2% and maybe even 1% to adjust for this correction in the past, then we could see inflation actually get back down to maybe even ones again. And if that happens, then man, that's when the Fed is really going to have to cut. And believe it or not, we actually we need to cut. Our national debt would, like, our national debt and the deficit would like love to see Powell and co cut down to 1%, or even ZERP again, if that's even possible. But you know, if we end up going to ZERP, that means that we're in recession. You know,
that'd be pretty crazy. I don't think we're going to go to ZERP again, not for decades. I think that is an old story.
Never say never, dude. Never say never.
Well, okay, not never, but at least not right now. Not with the resiliency of this economy. Like, we've proven year over year that this economy is resilient. I think anything just because GDP might be contracting for like a quarter or two, which I don't think is going to happen, but if that happens, that doesn't mean that GDP is going to like fall back to what it was in 2021. That just means that it's not going to grow. You know, it's like kind of like inflation. Like, people are like, hey, why are groceries still expensive if inflation isn't as crazy as before? It's because the prices never stopped going up. They just stopped going up as fast. So that's why we have the term disinflation versus deflation, because deflation is inflation going the other direction, negative inflation. Disinflation is just deceleration of the rate inflation. So you have 2% to 1%. That's a deceleration of 1%. So just a reminder, guys, we are also on YouTube as well. If you want to, go ahead to the link below. We are streaming this on YouTube. And if you want to go on there, guys, you can check out our previous videos, but do appreciate the support for the channel. For anyone watching on YouTube, remember to like and subscribe. and go ahead and hit the notification bell to get notification for future videos. All right, so let's go on to mobile connectivity around the world when it comes to building infrastructure. So there's been that story that for a while it was about data center, right? It was about building accelerated compute around the entire world. But people forget that we do have a lot of wireless devices. So with these wireless devices, we've already had a lot of infrastructure being built out, and probably like 5 or 6 years ago, that was when like Verizon was kind of going ham and T-Mobile was kind of going ham with building a lot of 5G towers, or actually upgrading towers around major cities. And then now it's actually expanded out to more suburban or rural areas. But you still kind of have that gap of people where you cannot provide that mobile connectivity because, one, there's not enough money to fund, or there's not enough. The companies that would build these towers out would not necessarily turn a profit, or they don't think they'll turn a profit building in certain areas. So therefore, they're not going to do it. And if, let's say, Verizon, if they can make a lot more money per capita in New York City, they're going to want to make sure they beef up that area versus, like, I don't want to say Des Moines, Idaho, because maybe like 5 years ago, Des Moines, Idaho would have been ghost town. But lately, they've been picking up a little bit. But when you think of Crown Castle, why don't you explain to everyone like what Crown Castle does and why at some point you were very bullish in Crown Castle, but now, actually, I'll let you go ahead with that one. Go ahead.
So Crown Castle, American Tower, these are plays on infrastructure. Everyone, we have cell phones in our pockets. We have connectivity everywhere we go. This connectivity comes from towers. So usually you take a fiber optic line, you hook up a cell phone tower, the cell phone tower broadcasts a signal, and that signal, gets sent to your phone, and that's what you use to transact with, right? So that whole system was created to basically provide coverage. Now, the way that you would do that is that these cell phone companies would rent space on these cell phone towers. So you would build a cell phone tower and then you would rent space on it. And basically every month you would pay rent to the landlord, which was Crown Castle, American Tower, SBA Communications. And it was a nice growth sector. So as more people got more cell phones, you needed more space on those towers, right? And then at the time you had about 3-4 actually major competitors. Now, the benefits to this was that this was a growth segment, right? So the more towers that you built, the more rent you could collect, and the more rent you collected, you could use that to build more towers. And it was a very easy business model. And it's worked out well for a lot of shareholders, especially if you've had American Tower and even Crown Castle for the last 20 years. It's literally been an up and to the right business with huge shareholder returns. The challenge that we're running into now is that with satellite internet becoming a new form of communication, you're still going to need these towers. Don't get me wrong. I think a lot of people think that all of a sudden, like these towers are going to go dark. Like, no, you're still going to need the towers. But the rate at which you need these towers to grow is going to actually compress, in my opinion. So you're not going to need as many towers in the future, right? That is going to curtail a lot of future growth. And because it's going to curtail future growth, it's going to impact the bottom lines of these companies. And then also what the valuations are going to be like. So right now, if you look at Crown Castle, and especially if you go, do like a 20-year up there and do like just towers. Fiber is a whole different beast. But
20 years, I could only go back about 13.
That's fine.
Well, actually,
however far back you can go. Yeah, however far back you can go. Here we go. It doesn't matter.
This is what I'm trying to do. Okay.
Yeah.
That's as far back I'm going here.
And just do towers.
This is fiber site rental revenue.
Yeah. So do towers.
Tower. Okay.
Yeah, because towers is where they really make their money, not really fiber. So you can see here over time they've been able to grow their business from about 2.6 billion in revenue from just renting out those towers to now where they are today. Something changed in 2022 and 2023, which was we had a merger of Sprint and T-Mobile, right? That merger eliminated an entire segment of customers. So usually what happens is these towers would have multiple radios from T-Mobile, from Sprint, from Verizon, from AT&T. Now, if you basically got rid of one of them, right? So you got rid of Sprint. Now, all of a sudden, that revenue that you were getting from that is going to diminish. And so now you only have 3 guys. So that was already a big blow to them and actually impacted their revenue. So if you look at December 23 and compare it against December 24, it's actually down year over year. Okay. Which hasn't typically happened a lot for these guys. So that impact to their bottom line, well, their top line it's not good. That's future growth that basically got taken away. The other thing is this business is actually very capital intensive, right? So you have to borrow a lot of money to build these towers. And then after that, you're collecting the stream of revenue for the next, however many years the towers are working, and then you maintain them or whatever. The challenge is interest rates started to climb. So as interest rates started to climb, the cost of that debt is also going to increase. But these guys had a lot of fixed contracts, which meant that a lot of their earnings, it wasn't showing up on there. The challenge is you end up hitting something called maturity walls. So when you refinance debt, if you finance debt at, let's say, 2%, and in 2026, you have new debt that's coming online, but that new debt is you're refinancing at 6-7%. You're basically taking away from your earnings to pay for that additional interest. So what these guys did is they, instead of cutting their dividend and everything else, they ended up just selling their fiber business, and they sold some of their small tower business also. What this does is they're able to take that cash and pay down their immediate debt that's coming up, right? Which means that now they don't have to deal with the maturity wall, but it also means that future revenue and future growth is going to go down, right? So in terms of total value accretion for shareholders, it's not the greatest thing on the planet. They've also had to cut their dividend because now you don't have that additional income. Now they've promised to buy back some shares, but they're in a place where they're in a business that's slowing down. It's not necessarily dying, it's just slowing down. And so paying a premium for that slowing growth is not necessarily that great. The other thing is, in terms of total yield, if your dividends get cut, then the yield will go down. If their yields go down, investors that are looking for safe, stable yields may not exactly want to buy this at $100. They may end up, going down on the price before we get there. So the growth is not necessarily that great for these guys. On the other hand, there is another company that's coming online that I will kick to you, Sam.
Okay. So there is a company out there, which you probably have already seen in the title and also the thumbnail and the title on YouTube as well and Twitter. But anyways, it was pretty interesting because I always knew about this company. I've always done, just a little bit of research on them. But like when you hear about a company and then you see its stock and then you see it run and it kind of discourages you from even looking into it. It's like, I already missed it. There's probably a better opportunity in the stock market. So then you start hearing about, your friends start talking about it and whatever. And then you start to think, okay, let me just take the time to look at this one, right? Especially when the market is pulling back so heavily, it kind of opens up opportunities to get into things on a pullback, but also kind of look into things as maybe there was something that you're missing when a stock was up. And now that it's down, there might be some opportunity there. So one company specifically is AST Space Mobile. So AST Space Mobile is, for the most part, it's not, hold on, I'm trying to share this one. Let me take this one out. There we go. So essentially, it's a company that builds satellites and has launch partners to which was SpaceX, Blue Origin, and now I keep on forgetting the name of that Indian space launch company, but they're supposed to be launching more satellites in May. And what they're doing is they're building these you can see it on the screen. They're building these ginormous satellites, and right now they have about 5 of them out there, and those are considered the block 1 set of satellites that are out there. They're going to be setting out a block 2 out there, and that's supposed to be I forget exactly how many, but they're trying to have 45 to 60 satellites out there to be able to cover the underserved, or pretty much the people who have no mobile connectivity around the world. And they're going to be able to do this by continuing to launch these satellites that are actually 3 times bigger that they're going to be launching later on versus right now. By doing this, they already have contracts with these major mobile network operators. So they have a contract with Verizon, they have a contract with AT&T, they have a contract with Vodafone, and other companies as well. And even they have a contract with Rakuten, and I forget there's like another name of another company, but not really as nearly as big as the other three. But the thing is that when you think of, let's say, Starlink, as Starlink is right now, because I know they're trying to work toward it, but when you think of Starlink, you have to buy a Starlink device, right? Like there's different types of Starlink devices you can use, but you could potentially connect to a satellite and get broadband internet using Starlink, right? But the good thing is with ASTS Space Mobile is that you don't need any type of modem. You could just use the phone that's you carry around with you and just simply roam into an area where a satellite is serving probably faster speeds, similar as you would with a tower. You just start picking up data from the satellites. Obviously, there's going to be some extra service you have to pay for, and you probably have to like approve something. But once you get through that, you're not really, as a user, you're not going to really notice much of a difference as long as the speeds are very similar, but they wouldn't really put you on that satellite interface until you are in a favorable area where you would actually see similar or better speeds, right? So when it comes to that, being able to serve nearly 3 billion people around the entire world just have no mobile connectivity or no internet at all. So they're trying to bridge that gap between that last 5% who is not able to get the sustainable or even any internet whatsoever, by bridging that gap. So that way there really are no dead areas or dead zones anymore, right? So right now, obviously you can't like sign up for Verizon and start picking this up. They want to get at least 45 to 60 satellites out there to be able to cover that, because technically speaking, these satellites, they can't, there's going to be some gaps in there. That's why they want multiple satellites to be able to cover and have continuous connectivity versus like any time lags, whatever. Because, you know, as the Earth rotates, like a satellite's not going to be above you the whole time. So in that case, once you have that many out there, you will always be covered by a satellite. So think of it like in terms of towers. And let's say you're on your cell phone or let's say you're sitting in the passenger seat and using your cell phone while you're driving. As you're driving, you're roaming between different towers that are set in place. And these towers, since they're built on Earth, they refer to them as terrestrial networks, basically the towers that are built on the ground versus satellite networks, which is what they have 5 of them out there, and they're supposed to be releasing more of them. The plan is to expand this and scale it out, which is not an easy task to do whatsoever, right? Like in fact, when you really think about it, how many companies have actually launched satellites into outer space and have them in service? Like there's only just a few of them, right? And to this scale, even to have 5 already out there and they're continuing to build more, this company, along with that, they also have these deals that they already signed, multi-year deals with a lot of these mobile network operators out there to be able to use that service. So very similar to what you're talking with Crown Castle, how Verizon, let's say, would pay Crown Castle to rent space, quote unquote space, or bandwidth on their towers to be able to serve to their clients, because Verizon's not actually building these out there. And technically speaking, AST Space Mobile isn't actually signing people up with like phone plans or anything. They're just being used as the provider, similar to Crown Castle, to these mobile network operators. So being able to do that at this scale and not yet doing it, I feel like whenever you think about this company right now, they're pre-revenue, but like once they start picking up on revenue, I think that given the amount of contracts that they had, and they also have governmental contracts as well, it could potentially be something that can become very profitable very quickly. I wouldn't say overnight necessarily, because there's obviously going to be a lot of policies and things some hoops they got to jump through. But at the same time, I think something like this, it could be pretty big potential as long as, in my opinion, the bull market continues. You know, like if you think about the bull market bringing all stocks up, like a wave bringing all ships up in a wave, it'll be the same thing going downward. So I would say that when you think of a company like this, you probably want to be positioned in this company, either one, when that asymmetric risk is out there, but 2, for the long haul. Like I would say in this current market, you don't really want to buy something hoping you can make money tomorrow, because we are kind of in this weird choppy state. But nevertheless, I mean, the more I've dug into this company, the more I'm just like, it's actually a really interesting story when you think about it. And I feel like whenever it comes to this, I haven't even like went too deep in it, right? Because I feel like there's so much more information and new news that's coming out here for this stock that it would be very hard to cover it, especially in this hour that we're on here. I mean, you've been doing some research. Oh, go ahead.
I've been looking at their business model, which I like a lot more. See, the thing is, you have other competitors out there also, like SpaceX, and I think some of the other ones. But the way that these guys are doing their business is very similar to what American Tower does. And believe it or not, American Tower is actually one of their investors who own an equity stake in them. So essentially, instead of trying to focus on creating your own network, I think that's what SpaceX might be doing with Starlink, which is creating their own specific network. All these telecom operators, they're just contracting with them and saying, look, give us a few pennies off of your revenue, right? We'll provide this infrastructure layer that gives your customers this value-added service that you can sell, and just give us a piece of it, right? And it works out well, because now ASC doesn't have to do any marketing. They don't have to do any additional, things to basically hire people like salespeople or anything. Nothing. Basically, they just have to work with their partners and say, look, you will contract with us. Your users that want to use this service, you can sell it to them. You can get majority of the money. We just want to take pennies off the total cell phone bill. Now, the funny thing is, because this is so scalable, right? Because you have these satellites, and once they're in the sky, you of course have to maintain all the infrastructure and everything else. But it gives you this ability to just focus on creating the technology layer, not necessarily having to deal with customers, not dealing with sales, not dealing with strategy, not dealing with fighting between different MNOs that are out there. So that backbone layer is amazing. And I think that's the thing. And that's why if you look at it, towers were the 2000s, satellites are likely to be the 2020s. One of the things I like about this company that gives them a unique moat compared to some of the other players that are out there, and I'm not so sure how durable this moat is, but it looks pretty durable as of right now. The fact that you don't need any additional hardware to basically get this signal is a really big deal. Because as far as I know, SpaceX still requires a dish for higher speeds. It doesn't need a dish for low bandwidth. These guys can get higher bandwidth from their satellites. And I think a lot of their technology is patented. So it's not like someone could just come in and use the same technology tomorrow. Now, that doesn't mean that other competitors can't come up with other patents that basically can outshine these guys. But even when it comes to that satellite signal, it has to be transmitted at a certain at a certain frequency. And so the frequencies are actually owned by a lot of these MNOs, right? So if you own those frequencies and these guys are transmitting on it, you benefit, because now you don't have to go out and buy those frequencies. The way that it works for the frequencies is there's a certain bandwidth that you have to basically buy a license for, and countries make money off of that. So a lot of these MNOs, they've already bought these frequencies, and so if these guys can piggyback using those MNOs frequencies, then that means that now that's one less expense that they have to deal with. Spectrum, right? So this is where it's an $8 billion market cap company right now. It hasn't generated any tangible revenue, but this is something to just basically, in my opinion, look at for future revenue potential and what this could actually mean. Not 1 year from now, not 2 years from now, but what is this thing going to be like 20 years from now? Are we looking at the next American Tower? Are we looking at the next Crown Castle? And it's very possible that we are, especially because now from an infrastructure standpoint, you don't need all this fiber that has to be laid on to rural parts of the country. Same thing with, you don't need as many towers that are just sitting there and basically, sometimes they get used, sometimes they don't. So rural areas especially are going to benefit significantly from this and from SpaceX,
Yeah, I mean, even Johnny Mac was asking me, any thoughts about like, because they don't. So when you think about SpaceX and when you think about Starlink, obviously they're not the same exact company, but they're pretty much all under the same umbrella or the same entity, right? Elon's going to help Elon launch satellites into outer space with Elon's help. That's he's going to put himself in the front of the line, most likely. He's going to put himself first. But the thing is that AST Space Mobile, like they already have contracts and multi-year agreements or multi-launch agreements with even SpaceX, but also Blue Origin as well, and the Indian Space Research Organization (ISRO). Yeah. That's the one that they're going to be using to launch the satellite in May, which is part of the Block 2 satellites.
There's others out there too, man. Like I fucking hate Matt, but there's Rocket Lab and their Neutron, which could also be a vehicle later on. So the amount of companies that can.
Yeah, not the larger one, because the satellite payloads are fairly smaller to use like a massive rocket to do that. So,
yeah. No, this is something that you're really gonna have to like have a horizon of a long time out there. I know a lot of people are asking right now, like, what, like, would you want to pay $8-10 billion market cap for something that's not, not even generating in revenue? And I'd say to you, well, if the total market potential for this is literally in the hundreds of billions, if not trillions of dollars, it's not a bad price to pay. But once again, you have to be in a position where you really think that this is going to be something that's disruptive, that's going to be happening. So you really have to project out 5 years from now, 10 years from now. And could you see a world where this makes sense? In my opinion, it totally makes sense because there's other revenue points that can actually come outside of just cell phones. There's IoT, right? Internet of Things. There's robots. There's connected cars. You think cars right now are not connected by satellites? Like everyone is going to have some level of connectivity on all sorts of devices. Same thing with like enterprise clients. Enterprise clients are moving shipments, moving things. They're having this global network of connectivity just provides for better transparency of all your supply chain. So yeah, you're going to have to pay a little bit, but if you're paying a little bit to basically, get all the information you need, this once again could be a huge growth driver, in the future. Amazon's Kuiper could be another competitor in the future. And I think that's a true point. Competitors are always going to come around. I don't think you cannot invest in a business just because there's going to be a future competitor. The edge that this company has compared to a lot of competitors in the future is that they're developing the relationships with all the major MNOs right now, right? They're not having to deal with all the sales and everything else. So getting all of these other companies to be invested in your technology, right? And growth potential is actually rather good. And there's probably going to be a moat there also. So we'll see what happens. ASTS needs to become fully operational ASAP to maintain momentum. That's probably true also. Generating
they're already working on that. Yeah, I think the goal was they want to get 25 by the end of 2025, and then they would need 20 more to have 45. But I think they want that solid 45 to 60 range in order to actually start offering these services on a global scale. So when you think about that, that could potentially be 2026, but they have 5 out right now. And they want to get 25 in orbit by the end of the year. You're talking about an extra 20 satellites by the end of the year, right? Can you please show me another company that's doing it at that scale other than maybe Starlink? Because you're bringing up Project Kuiper. How many satellites has Project Kuiper released? I'm just curious. Like I'm not saying that there's no competition, because certainly Bezos can, because since Bezos is definitely focusing on Blue Origin, he could be trying to build his own end-to-end network there, owning the whole logistics systems when it comes to deploying their own satellites out there. So that's what Elon's doing, right? He's launching his own satellites out there, so he doesn't need to sign any multi-year agreements in order to launch things to outer space. He could just do it himself. And if you think about Jeff Bezos, Blue Origin is doing the same thing too. So it is somewhat of a race, but at the same time, well, there you go. Okay, so maybe they can't reach a 20, but that's the reason why they have contracts with other companies. Besides, of course, well, they don't, not necessarily the Rocket Lab, but that's the reason why they have multi-space launch platforms that they're going to be launching from. Go ahead.
By the way, they started beta testing already. So right now, AT&T is already doing beta tests. So once that's complete, the FCC, like right here, the FCC today announced special temporary authority for AST Space Mode, giving the company until May 30th to test their Bluebird satellites using AT&T spectrum. AT&T launched and deployed 5 Bluebirds, blah, 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 blah. But basically, once the coverage is done, there you go. Then they're going to launch fully. And then we'll see, right? Basically, the beta testing has started. So this is not tomorrow's technology, but it's going to go live. And when it goes live, we'll see how good it is and how the adoption curve. And if you want to wait until the adoption curve comes around, well, go for it.
Yeah. So if you think about something like this, and then so should we move on to the topic of risk management? Because I feel like a lot of people are kind of like jumping in there. Hey, I don't want to pay 8 billion market cap for this company if they're not generating revenue. Well, like totally understandable, right? But at the same time, like Kris was saying, what can you exactly project out with this company in terms of the potential of the amount of additional contract tickets signed with other MNOs, mobile network operators, besides the few that they've already done? And when I say the few, okay, I don't know if you live in Europe, but Vodafone is one of the largest mobile network operators out there. And then they've signed it with Verizon, AT&T. Like, again, these are multi-year contracts. Like, this isn't just like, hey, we might do this with you, whatever. Like, all I'm saying is that, and I'm not here trying to convince you, because I want you guys to also do your own due diligence on this. Like, I was skeptical as well until I started looking into it. But at the same time, I think for me, I built enough conviction to buy maybe a little bit lower from now, and definitely not a big size at all, because I also am skeptical as well, because my main job is to manage my risk. Like, I'm not going to go out there, and for me, at least, as far as my conviction goes, it depends on where you go. Like, if you look at, I'm not going to try to compare Rocket Lab as well, but who would have thought that this was going to happen to Rocket Lab this soon? Like, it just takes literally one thing to happen overnight, or one change of catalyst to happen overnight, to basically get a lot of people in something and excited about something versus people who research a stock before it actually gets there. And you guys have done it beautifully at Rocket Lab, and probably has a lot more to go as well. But at the same time, is for me, and probably for a lot of people, you have a basket of stocks that you put inside a speculative bucket, and you only need like 2 or 3 of them to actually work in order to pay for the entire bucket, and plus more on top of that. And think about, I'm not saying that this is going to be the next Amazon or anything, but if you think about certain companies that people literally thought were just going to go to zero, and then take Amazon, for example. People thought it was going to go to zero. People thought Amazon was going to perform even worse in 2022 when they were building a logistics system. What I'm trying to say is you really cannot value, especially something like this, based on its current fundamentals. Because if you do, you're literally looking at paying $8 billion for nothing, because they have no revenue. But then if you look at the contracts and the size of the contracts that they are signing up with these very reputable companies, especially the SDA, which is part of the government, what could potentially happen beyond that, right? So that's something you kind of need to think about when it comes to this. And yeah, of course, like, again, I'm not saying that this is like a Rocket Lab. They're basically 2 different businesses anyway. So what I'm just trying to say is an example of what it means to kind of think about something for more than what it's worth today, but more what it might be worth in the future. And then size it right from there, depending on how much conviction you have. I mean, did you think that Palantir was going to be 100 times? 10 times than it was in just less than a year after that? Much different story, but something you got to kind of project out.
Yeah. No, man, it's a very interesting thing. I mean, when you're investing in new technologies, especially disruptive technologies, you're going to have to weather the questions, and that's fine. It's just a part of how things are. Speaking of an industry that is disrupting things right now, natural gas. We should talk about some natural gas, because I think we've done
talk
well.
about ad tech, man. That would have been fun to talk about.
Yeah,
we could definitely get into nat gas. Yeah.
So one of our key things that we've spoke about on the Patreon, and thank you for everyone that joined the Patreon and you're doing well on it, is next decade. NextDecade finally cleared some regulatory hurdles over the last few months. The Trump administration has been really pushing natural gas, and especially liquefied natural gas. And the Biden administration had put some really big restrictions on natural gas exports last year. And basically, one of the things was there was a lawsuit that basically got brought up in the court system, and it kind of like put this company's future into question. When that happened, the stock tumbled from $8 to $4, and it kind of hung out at this $4 level for quite some time. People who were in the Patreon, of course, we loaded up, which was good time to load up. And literally it just been riding up, and now it's almost at $9.26. I mean, it's down overnight a little bit, but you know, this company is still a $2 billion market cap, $2.4 billion market cap company. Me and Matt have covered this company on Cash Flow Chronicles for a while. So if you guys want to see some of the information about that, just, you know, join Cash Flow Chronicles and y'all can check it out. Then the latest one that we've actually been heavy into investing is Venture Global. Venture Global, on the other hand, is actually, since its IPO, been down from 25 to 11. Now, the reason for that is that some of the estimates that they had on for this year were dramatically scaled back in the first quarter's earnings. My thing is the market is probably overcorrected. And if your time horizon is not 1 year, 2 years, I think this has a lot of value ahead of it. So, you know, over time, this thing is going to provide a lot of value to shareholders. It generates a ton of cash flows. Those cash flows are probably going to end up going back into either combination of share buybacks and dividends. So that, you know, is a great place to be in. Basically, you know, this is a more mature company. The market cap's around 27 billion, but they're projected to do about 7 billion in EBITDA this year. They are a little bit more exposed to spot natural gas prices, which means that, you know, the valuations may not always be, what's the word, like steady, but it doesn't matter because you're basically getting cash, right? So cash is where you want. Cash flows are basically like the engines that drive companies' stock prices higher, because you can do a lot of stuff with it. So I think Venture Global has a nice long-term trajectory of future growth. They've got multiple plants that are coming online in the future. They just approved export licenses for non-FTA companies for their CP2 project, which already they've started to work on by ordering, like, all right, I'm not going to go too far into it here because me and Matt have really like spoken about this on an exhaustive.
Yeah, I put it. Where's that link that I put on here? Yeah, go ahead and check it out, guys. This is the link to Cash Flow Chronicles. You guys want to check it out? Yeah, they've done a lot of episodes on this one. They get really deep into the woods in this one. So if you this is something you're very interested in, you know, go ahead and check it out. Yeah, definitely do your own due diligence on this stuff. Like, I feel like when it comes to this stuff, it's not as fascinating as a tech stock. But the thing is that you can't just focus on one sector when you're investing in the market. You want to kind of diversify a little bit. That was something pretty interesting with NextDecade. It was just like going from like looking at Amazon NextDecade is not exactly the most fascinating thing in the world for me. Maybe for some people it is. But once you find out the potential opportunity and project that out in the future, that's when it starts to get very interesting. Yeah. So
and again, portfolios should also have exposure to other parts of the market as well. Exactly. Like, because being 100% in tech, especially when tech valuations are, you know, at pretty high levels, is not exactly the greatest like investment idea in the world. You know, tech does well, but you also remember there's a cost to be had with tech. Tech is also one of the sectors that can get disrupted very easily, you know? So I'd say making sure your portfolio has diversification into some of the other things. My only thing is make sure that the business model that you're in gives you a return that's possibly much higher than some of the other sectors you want to be in. So I would say if you're looking at oil and natural gas, I'm not the biggest fan of being in the upstream part of it. I am in the infrastructure layer though, which provides almost like a toll bridge, right? So regardless of how you feel about, oil and natural gas upstream, because that is a lot more driven on consumption and demand, supply and demand. This is more on, it has supply and demand characteristics, but it's a lot of fixed contracts that basically allow for businesses to adopt a more tolling model, where basically you're basically paying to cross a bridge, and every time you cross a bridge, that company is going to be making money. Now, is it expensive to build that bridge? Absolutely. These companies have a ton of debt on their balance sheet, and over time they pay back that debt. That's going to just create more value for shareholders. So it's a combination of, what kind of business model that you want to be in, and what the trajectory is going to look like 5-10 years from now. And for me, when I look at natural gas, I don't see any demand shortages in the future. And I think they're going to be able to do well. They're going to, and that additional cash flow is going to go right back into buying back shares, like I said, dividends, and which is highly, highly accretive for shareholders. So,
what's actually pretty interesting is that what everyone is kind of associated with, like the future data centers for all the AI infrastructure and compute that's being built out, which I don't think is over. But I'm just going to preface that. Like, I don't think that the AI data center boom is over. I don't think it's even close. I think there's a little bit of a slump right now and a little bit of a scare, but I don't think it's over. But one thing that we've heard from many of these CEOs, especially with these large data center building companies like Nebius, but also NVIDIA, even though they don't build the data centers themselves, they are contracted directly with a lot of these mega cap companies, in addition to other companies that are actually building these data centers, is that they're power constrained, right? So a lot of the talk has been nuclear power is going to be the solution for powering all these data centers, but like these nuclear reactors can't really come online until like 2028 probably. Yes, there's some of them that are already online now, but they cannot provide power to the capacity of what's actually expected for a lot of these data centers. What is the next form of energy that could be provided that we have enough amount of and not as expensive to generate, produce, and even supply to these data centers? In fact, there's been data centers that are already contracted with these type of companies, and that's LNG, right? So, or basically nat gas, right? So liquefied natural gas, that is something that is accessible right now, and it's not as expensive. You just got to work the ends to actually get it there, but that's actually happening right now. Like, nuclear is not the only answer when it comes to all this. So which way do you want to be positioned? Do you want to be positioned in the Oklos and in the NNEs of the universe? Because if you were, you probably got killed a little bit in some of them, but those are also pre-revenue as well. But you also have other companies that are actually generating revenue when it comes to natural gas, like VG from that perspective, right? So you got to kind of think about the play here, right? If you think the data center expansion is still going to continue, the energy's got to come from somewhere. And if the greatest CEOs in the world are telling you that we're power constrained, what do you think they're going to turn to? Right. So,
yeah, I mean, when I look at nat gas, I mean, everyone is shifting to electric cars, but like, where's that electricity coming from? Yeah, renewables.
Yeah, it's coming from somewhere.
Yeah, renewables, but renewables, the wind doesn't always blow and the sun always doesn't shine. So you need like a bridge between the two. And natural gas can provide that, because you can ramp it up very quickly, ramp it down very quickly. And so that bridge means, a lot of countries are going to adopt it. So future demand is there. The US is willing to provide that. We have cheap natural gas. They have expensive natural gas. We make a difference on the price. Our competitors are the Russians, which no one trusts anymore, mainly because of all the stuff that happened. The Qataris are there, but there's geopolitical implications of Qatar that you have to deal with also, right? Because Iran's right there, right on their neighbor. Any supply disruptions to Qatar, natural gas prices will go up through the roof. So countries have realized that you really need to make sure you're diversified in your energy supply, future energy supply. Nuclear, I think, is great. I love nuclear, but the amount of pushback, I think, from environmentalists and from people that are more on the national security side of things may be a little bit strong. Not to mention the technology is unproven. it's still, in my opinion, 5 to 10 years away from, like, even SMRs are 5 to 10 years away from becoming a major factor. And even then, you know, there's going to be a lot more difficulties in getting that to the masses, whereas natural gas right now is the technology that's right here.
It's available right there. Like, I think just the fact that you're taking the geopolitical risks of, also especially with the volatility of price when it comes to other forms of energy, especially coming from oil, you know, looking at the existing presidential cabinet, they don't want to rely on that. In fact, they want to work on exporting our natural gas, because we're like one of the number one producers in the entire world of natural gas, right? So
yeah,
we want to make money off of that. Yeah, we want to make money off of that, and that is the goal, to bring up the top line of the U.S. government while reducing the costs to ultimately increase the bottom line. The bottom line will always be negative, in my opinion, but at the same time, they want to reduce the rate of that, right? So to increase GDP. Go ahead.
One of the things I was explaining to someone I had a one-on-one with Patreon earlier today, and one of the things I explained to them was, you know, all these countries are being asked from a reciprocal tariff standpoint to lower the trade barriers. And the thing is, to close the trade deficit, you need people to buy something that America makes. Okay. Countries are not going to say, yeah, let me buy a made in America, I don't know, TV, because we don't make TVs, right? Let me buy an American made car. Well, not everyone wants American cars, you know? There are so many limitations to what countries can buy that if you want to close the trade deficit with the United States, you just buy their natural gas. That's it. It's very quick. Like, hey, listen, I have a commodity that I need. These guys are willing to put tariffs on me. Why don't I just buy natural gas? And boom, now all of a sudden that trade deficit doesn't look as bad, and I don't get hit with tariffs, reciprocal tariffs. So in my opinion, natural gas has like, the US is really pushing a lot of natural gas out there onto the planet. And these companies are going to benefit significantly from that.
Yeah. So. No, I do believe that, especially since, like, when it comes to next decade, one of the things about that is they were already contracted with a lot of companies out there. Like, they already contracted out a bunch of products before they even produced it. Right. So yeah, I guess that kind of helps the conviction as well. It helps mitigate the risk in terms of, like, hey, are they going to deny, you know, expanding these other trains in their unit? It's like, well, I mean, I don't think these big companies would sign these big contracts with next decade or Rio Grande if that wasn't going to happen. Right. It kind of builds that conviction a little bit. So, you know, not to say, just like it had that asymmetric risk where it's like, well, if you buy now, and obviously I think the risk is probably still there, but the asymmetric upside is not there as much as it was 50% down from here. So you know,
I'm going to show something. It might get us demonetized, but it's hilarious. So
no, please don't show it.
We gotta do it for the content. So it's okay. I've been seeing this on Twitter, and I don't know what genre of freaking I'm not advocating for this crypto, by the way. I'm just saying it's hilarious, the videos that these guys have been making. You got to see it. I mean, the quality of AI for these guys is hilarious. Hold on.
Oh my goodness.
The fat niggas just landed on the moon. These skinny ass scientists really said we was too fat for space. So the fat niggas created SpaceXL and built a team of the highest IQ big boys on the planet. Introducing Fat Nigga Tech. This right here is the apex of black excellence. The Fat Nigga Mothership, aka the Big Dipper. While the rocket scientists stress about efficiency and weight, we built the heaviest, most luxurious spacecraft in the galaxy. These big body V8000 rocket thrusters run on Henny plasma and Fat Nigga coin liquidity. This $10 trillion machine is operated by Fat Nigga Hal, a personal onboard AI supercomputer. These niggas always move in style, and it ain't no different in space. We got the Fat Nigga Suit Pro Max, gold-plated, bulletproof, and designed to withstand a 300-pound nigga smashing snow bunny coochie in zero gravity. We floating through this shit like we built this bitch. All this tech, All this innovation, all this big body science, and now we finally here. The moon belongs to the fat niggas now, and this is just the beginning. What do you think the fat niggas got planned for the moon? Let us know in the comments.
Bro, when I saw that, I couldn't stop laughing, dude. You're muted.
It's not even the monetization. It's the fact that people might watch that and be like, what is this nonsense? And turn it off or get offended. Like that's the reason why I don't want to do that. Oh god.
Dude, the genre behind this is just hilarious, dude. Like they have this for like everything. And it's just hilarious. And this is like the kind of stuff that you see. What is that they called with AI that's being created now? Because that was created purely on AI. You know, it wasn't.
Yeah.
And it was. It's just hilarious.
I don't know how they're able to do that. To be honest, like, do you have to pay? Do you have to pay people to build that for you? Like, I feel like you can't just go to some website and create that, can you?
I don't know, dude. I don't know, but it's a trending
doesn't have
thing
sound too as well. Like I thought you couldn't have sound with it. Now they have sound. That's crazy, man.
Yeah,
this is crazy.
There's another one, but I don't know if we want to watch it. Hold on. There's one more. I mean, we might as well. We might as well.
That's enough, dude.
Come on. Just one more because I keep seeing it. So, hold on.
Ni hao, niggas. The big boys just landed in China. The big Laoban saw us making moves and flew us in. Treated the big boys to some delicious Sichuan hot pot. Damn, this nigga just became a mukbang influencer.
Babe, I just went viral on Douyin.
Floating through the West Lake, relaxing, soaking in the beauty and culture.
OMG, it's just like Black Myth Wukong.
Look at these handsome Douyin niggas really breaking it down. They're good, but the big boys gonna show them how it's really done. And don't think we forgot the Andes. Got the big boys working on their mind-body connection.
Wow, this is even better than Pilates.
This ain't no Lime scooter, nigga. 0 to 60 faster than a McLaren. These niggas got bricks in this bitch. Only the finest 30-year-old Pu'er tea.
Babe, do you think they have oat milk?
The big boy stepped into the mahjong room and walked out with new business partners and a cigarette addiction. Fat assembly lines and even fatter contracts. Locked in mass production for these fat nigga tech GPUs. These niggas really put the N in NVIDIA. You know we already thinking about the next business trip. Where should the big boys go next? Drop a comment.
Bro, I can't do it. I'm telling you.
We are not gonna play this stuff in this stream anymore. Like,
dude, you gotta make it entertaining. I mean, the other way, look, monetization is not the end all.
No, it's not the monetization. It's possibly offending people that might not be laughing in the audience right now. Like, just having that equal amount of respect for everyone, especially since we're putting this on a public platform. That's the only reason. That's the only thing. Like, it's not the monetization. It's the fact that people might get offended. I personally don't like to
look.
I mean,
at the risk of
we can watch between us two, but I don't want to like play that in like public channels and stuff.
At the risk of offending people, dude. It's not like we created it. It's not like we're advocating for it. It's just this is what people are creating in the background using AI. Okay, some of it is just hilarious content. I mean, you saw it. It's meant for satire. Okay, it's not meant to. In my opinion, it's not meant to like offend people.
Obviously
maybe it
not.
is. Maybe it is.
Obviously not. But you never know. Yeah. You never know about the person.
Like me and you love the Chappelle show. We've watched the Chappelle show on this.
Right? That's great, but I'm not blasting.
You don't think that offended people? You don't think that offended people?
Oh, that offended people, but you know.
The sensitivity to offense has gone up significantly since the early 2000s. I think that's one of the challenges that,
dude, Chappelle would not play a clip like that in his show.
Yeah, he would be 10 times more.
He'd get canceled off Comedy Central playing that.
Yeah, but that's because that's the 2020 version. I mean, dude, 2019. Dude, do you remember the Chappelle show when it first came out?
No, I remember. But they had the uncensored version that you could watch. But like, this is like beyond Chappelle show. This is like,
come on, Space XL. You don't think that's hilarious? I loved it, dude.
Actually, one of my favorite.
The other one was they walked into a mahjong playing thing. They walked out with what is it? Addiction to cigarettes, you know?
Oh wow! Oh yeah.
I mean, creativity is one of those things that at the risk of sound, like, okay, here's the funny thing. Like the other day, I was on Amit's stream in the morning and he was like talking about steak. And I was like, y'all asking Hindus about steaks, bro? Got the worst Hindu out here telling y'all, oh yeah, you should eat a steak medium well. Bro, don't ask a Hindu how to eat steak. Right?
I know. I mean, I don't, now that I think about it, I don't think I know a lot of, well, I guess I do, but just not necessarily trusting the best steak advice or how to eat a steak from someone who's in there.
Sorry.
I don't know if he eats, I don't know if he eats beef or not, to be honest. So
he does. He had steak.
Oh, okay. Well, there you go.
Hindus are
Hindus
are not where you look for that, bro. I'm sorry. All right. I'm a Hindu. Like if you ask me like, hey, what's a good steak? I don't know, bro. I don't eat steak on the regular like that. You know? So yeah, look, if ever anyone was offended by the clips that we played, we're sorry. It's not something we created. It's just
still gonna play it.
Yeah, but it's something that we have to look. I'm from a different generation where, I mean, you're from the same generation as me. We laughed at this shit 20 years ago.
It was funny. It was funny,
20 years ago. This wasn't even offensive. This was just how comedy worked, where you just took stereotypes and you made fun of people's stereotypes, and that was it. You moved on from it, you know. Clayton Bigsby, yeah. So
that was season 2, right? Or was that season 1?
Yeah, black white supremacists.
No, that was season 2. That was season 2. The blind white supremacists.
Yeah. You know, just for clarification, if anyone was offended, I'm sorry. All right, I'll just say it up front. I'm sorry.
Well, they're already gone.
Huh?
They're already gone.
I don't think it's that big of a loss. It'll be okay.
Yeah.
You know?
All right. But I think that's about it. We're probably going to talk about ad tech next time. Definitely can't talk about right now. We could definitely get into that one.
Fat crypto as ad tech.
Oh yeah, fat crypto ad tech. That'd be an interesting one.
Should we play one more?
Well, no, because I actually have to go. We're past the top of the hour here. So I'm going to go. You could stay on. I could leave this thing running. You can go and play all those things for the next 2 hours. Keep all these people satisfied if you'd like to.
No. I'll leave it alone. You know, it's just something that you see on these things. It's hilarious how people are using AI. These are not things that people would have thought like AI could be around. Like, all right, forget. Yeah, you could leave. I'm going to show one more. Hold on. This one is Rogan.
Okay, I'm about to get my stuff ready.
All right, let's see.
Is this shit for real? Is Joe Rogan hitting cosmic DMT with the fat niggas and some ugly ass alien? God damn, y'all seeing this shit? This nigga levitate. These green niggas came for one thing and one thing only, fat nigga coin. They tried to offer intergalactic crypto, but the fat niggas only take pure cosmic DMT. Had to fly Joe Rogan in to test the product. One hit launched his ass straight into the fat nigga dimension. Golden Sky.
All right, I'm done. I can't do it anymore.
That's it.
I can't do it anymore.
That's it. Signing off, y'all. Talk to you guys later.
Later. Take care, guys.